All right, today we are jumping headfirst into the high-stakes world of quantitative finance. We're going to look at a huge battle going on between two AI giants. You've got the tried-and-true workhorse XGBoost versus the powerful but, kind of mysterious world of deep learning. So, this is the big question, right? In this fight for market alpha, which AI is actually king? Do you stick with the established champion that everyone knows and trusts, or do you bet on the mysterious new challenger? Let's dig in. So here's how we'll break it down. First, we'll meet the reigning champ, XGBoost. Then, we're going to introduce its deep learning challenger and the totally different philosophy it brings to the table. After that, and this is the cool part, we'll see how they can actually work together. And finally, we'll put it all together into a modern toolkit so you know how to choose the right model. Okay, let's get right to it. First up, XGBoost. You have to understand, for a massive number of quant trading firms, this isn't just some algorithm. It's the absolute gold standard. It's the reliable engine that's been powering countless strategies for years. So what's under the hood? Well, at its core, XGBoost uses this really brilliant process called gradient boosting. See, it doesn't try to build one giant, perfect model from the start. No, instead, it builds a team of simple models. And here's the clever bit. Each new member of the team has only one job: to fix the mistakes that the previous ones made. It just keeps learning from its errors over and over, getting smarter each time. The process itself is just this beautiful, elegant loop. It starts out, makes a simple guess with, say, one little decision tree. Then it looks at how wrong it was. And its very next move is to build a brand new model that is laser-focused only on those mistakes. It adds that new model to the team and just does it again and again, getting a little bit better with every single cycle. Now, the extreme part of XGBoost, that comes from its secret weapon, regularization. Think about financial data for a second. It's like trying to hear a tiny, faint signal in a room with a ton of background noise. Regularization is basically a built-in filter that stops the model from getting tricked by all that random noise. It prevents it from hallucinating patterns that aren't actually there, which, as you can imagine, is a huge reason why these models are so tough and reliable in live trading. And all these things together are exactly why it's a quant favorite. I mean, it is incredibly fast. We're talking minutes, not hours. And that speed is a massive strategic advantage when markets are changing and you need to retrain your models all the time. It just crushes it on the kind of structured, spreadsheet-like data that quants live and breathe every day. And it's tough. It can handle the messy, real-world data that has missing values or weird outliers without breaking a sweat. But XGBoost isn't the only game in town anymore. Now we've got to introduce a completely different way of thinking about the problem. Enter deep learning. Models like LSTMs and transformers, they don't just want the features you carefully created. No, they want the raw story of the data itself. This slide really gets to the heart of the philosophical difference. Think of XGBoost as a master craftsman. You bring it these perfectly prepared pieces of wood, your features like momentum or value, and it builds you a beautiful, sturdy piece of furniture. Deep learning, on the other hand, is an explorer. You give it a map of a raw, untamed jungle, the sequence of prices, and you tell it, go find the hidden treasure. It tries to find the patterns all on its own. So let's put them head to head. You can see there are some very clear trade-offs. XGBoost is fast, easy to interpret, and loves tabular data. LSTMs are built for time series, but they're slow. Transformers can see the whole picture at once, but man, are they data hungry and expensive to run. And that last row there, interpretability, that is a massive deal in the world of finance. And that issue, interpretability, it leads us right to the famous black box problem. When you have millions of dollars on the line, you better believe that risk managers, investors, and regulators all want to know why a trade was made. XGBoost can give you a pretty clear answer. It can rank which features were the most important. With deep learning, it's often a total mystery, locked away inside millions of complex parameters. And the resource demand is a huge factor too. And look, this isn't just about time. It's about cold, hard cash. Training these giant deep learning models often means you need clusters of specialized, expensive hardware like GPUs. Meanwhile, the much more efficient XGBoost runs just fine on a standard CPU. So, you've got the craftsman and you've got the explorer. It sounds like you have to pick a side, right? Well, what if you didn't have to? This is where the story gets really, really interesting, and it's where the most sophisticated firms are finding their edge. The smartest teams out there have realized this is not an either-or debate. It's not XGBoost versus deep learning. The real alpha comes from creating a powerful partnership that uses the unique strengths of each model. Okay, so here's how it actually works in practice. It's so cool. First, the Explorer, the LSTM, goes deep into the raw time series data, and it draws a map of all the hidden temporal patterns it can find. Then, it hands that map, which is now a powerful new feature, over to the master craftsman, XGBoost. XGBoost then takes this new, amazing map, combines it with all its other tools and features, and makes the final, precise, and much more informed decision. And this approach has been proven to be incredibly effective, especially in wild, volatile markets like crypto. You can have an LSTM analyze the raw minute-by-minute price action, while XGBoost takes that analysis and weighs it against bigger picture stuff, like the strength of the dollar or how much activity is happening on the Bitcoin network. Study after study shows these hybrid models consistently beat out their standalone parts.
So what does all this mean for the modern quant? Well, it means you got to think less like a warrior fighting for just one side and more like a general who has an entire army of specialists at their command. So let's build a practical framework for how to decide.
And here it is, the fundamental shift in thinking. We need to stop asking which model is better, and we need to start asking, okay, what is the specific problem I am trying to solve, and which of these tools was designed for that exact job? So let's start with question 1. If your alpha, your edge, comes from combining factors that you've researched and carefully built yourself. If the answer is yes, then your starting point should absolutely be XGBoost. Its strengths, speed, interpretability, performance on tabular data are perfectly aligned with that kind of problem. But what if your edge is hiding somewhere in the raw sequence of prices itself? For those patterns that are just way too complex to engineer by hand? Well, if that's the case, then it's time to send in your Explorer. You bring in an LSTM or a transformer to go automatically discover those hidden relationships for you.
And finally, there's the question that, for many firms, is a total non-negotiable: transparency. If you absolutely must be able to explain why your model is making its decisions, then the choice becomes crystal clear. XGBoost's built-in interpretability makes it the strongest and maybe even the only viable option.
The most advanced firms out there are building exactly this kind of unified toolkit. They're using transformers to read the news and financial reports, LSTMs to watch the high-frequency tape, and then they use XGBoost as the final trusted general that takes in all of this intelligence and makes the ultimate robust trading decision. And looking ahead, success isn't just going to come from having the flashiest, most complex model. That's only one piece of the puzzle. The real lasting edge is going to come from having unique data, from clever feature engineering, and from the strategic wisdom of knowing how to combine them with the right model for the job.
And that really leaves us with a final thought to chew on. In the future of AI-driven finance, is the best quant going to be the person who can write the most complicated code? Or will it be the person who has the wisdom of a master craftsman, who knows exactly which tool to pick for the job?
All right, the learning doesn't have to stop here. If you want to explore even more, I've built the perfect place for you at sophie-ai-finance.com to unlock a new way of learning. Think of it as your personal learning toolkit. If you just want the big picture, you can watch the video or listen to the podcast. It's perfect for getting the main concepts down while you're on the go. But if sometimes you need to hit the pause button and really let an idea sink in, you can visit the blog article. It has all the details, charts, and text from our discussion so you can review everything at your own pace. And for those of you who want to see all the math, data, and the complete nitty-gritty behind the analysis, well, I've got a full research paper waiting for you, so you can really dig into the details and see how everything works under the hood. It's all there, all for you. And hey, if you have any ideas for new topics about finance and AI you'd like me to cover, please leave me a message. Thanks for tuning in, and I'll see you in the next video.